Good afternoon, everybody, and welcome to Live Market Analysis ASX Edition. My name is Carl Capolingua. I'm the Market Analyst over here at ThinkMarkets Australia, and it's a pleasure to be with you as we delve into the depths of your Aussie portfolios. We're going to find the best ones. We're going to kick out the ones that aren't so good. We're going to find a bunch of great new trading opportunities for you to consider. The agenda for today is pretty simple. It's over to you. There should be a little chat window somewhere there if you're watching me live in session in Zoom, or if you're watching me on any of the streaming services, YouTube, LinkedIn, Twitter, Facebook, you'll have a window there. Type it in and the little request will pop up here. I'll give you my best technical and fundamental analysis reader. Let us head over to the charts first. If you don't know what charting package this is, it's AMI Broker. No big deal. AMI Broker. It's just a name. Nothing to do with a broker. One-off license, standalone. Head to the website and buy it if you want to use it. I'd suggest you need to know how to program the thing first. That's very important. And then you need to spend a bunch of money to put data into it. So I'm not trying to dissuade you from using it. It's just the one I use. Why? I've been using it for, well, over 10 years. It's what I like. I know how to program it, and I can put my indicators in there. Hey, use the one you're using. Many people listening here are using TradingView. Costs you a little bit of money, but it's a great technical analysis package. And it's got a wide variety of instruments that you can look at. Of course, your typical broking technical analysis package is going to do the job as well. And certainly the one we have at ThinkMarkets is top-notch A1 class as well. So that'll do pretty much everything that we're going to talk about today. Okay, so first in, best dressed today, and if you're just tuning in for the first time, you've never watched me before, technicals, fundamentals, of course. I'm going to do a lithium sector review today, mainly because I've had so many requests over the socials for it. In fact, let's kick off with that today, and we might head over to, I tend to do them alphabetically, so I'm just going to find it on my watch list here, and we're going to go Argosy first up, and we will do the whole sector. So Argosy, and I'm going to do some of these very quickly. Again, if you've never met me before, I'm not going to go in depth on stuff I have no interest in buying. Which stuff do I have interest in buying? The stuff the market wants. So I'm a technical analyst first and foremost. I'm a trend follower first and foremost, and I need to see some nice trends. And the trends are nice when they're double green heading on the way up, and then I can consider it for a buy. You can tell me all you like how good Argosy is. Unless those trends are double green, I really honestly have no interest in it. So, keep talking. I'm just going to go over here and play Tetris on my phone. This one's pretty simple. I know we do this lithium sector review, but it's pretty painless because I don't need to spend any more time talking about this. And if you still own this after months and months of listening to me, it's your own fault, really, isn't it? Let's go to Allkem. You can see we have been de-risking this one, so pushing some risk out the door. Why? Because those double green trends have been changing. Hey, don't get angry at me. I didn't make them go down. I didn't make my trend ribbons change color. I'd program them, but they do that all by themselves. And when they do, you need to start to be careful. First and foremost, in the short term, you can see here going through this uptrend, we're going to amber, something's wrong. And the other thing is you'll see, a couple of important points here in understanding when to start to de-risk your position. Lower points of supply. I've labeled these in the past. We've done this analysis in the past. Lower points of supply are a dead giveaway. What's a point of supply? It's a point where there's excess supply in the market, as the name suggests. How do you know it's an excess point of supply? Well, because the price went down from there. I mean, really, the price went down from there. There must have been excess supply. It's the only thing you can conclude. And when you start to get lower ones, it tells you that there was more excess supply. Excess supply is building. And if you want your stock to go up, that's not a great sign, let's face it. And between these points of supply, by definition, you'll have a point of demand, a point where the price bounced. How do you know there's demand there? The price bounced from there. And if you then close beneath that point of demand, you do have some big problems. Now, we can get out in advance of that using my model based upon nasty black candles. We'll talk a bit more about that as we go. But certainly you can see a minus 1/3 through here. I did say watch for the wrong candle. What does the wrong candle look like? It's this candle here, this little minus 1/3. See that candle? That's your next signal to get out. And then your final 1/3 is on a close beneath here because you've given it really all the chance you can give it to stay in this trade. Hey, if this goes up tomorrow, it gets taken over at $20 by Albemarle. Wonderful. Well, not wonderful, but there's nothing. I mean, you followed your system, and that's what's wonderful about it for me. Stuff happens. I was going to say a different word there, but look, that would be such an unusual circumstance. Probably what we'll see before then. And this is for those of you who love Allkem and think it's the best company in the world. Good luck to you. But I could certainly agree with you if it starts to do this sort of stuff. So we start to see those points of demand rising. So if excess demand is coming back into the system and supply, instead of building through these falling points of supply, are starting to push back, starting to give way and fall back to higher prices, that would get me more interested in Allkem. I could certainly buy it again. I could certainly start to add risk back into it because it would then be holding this long-term trend zone, and we'll find more often than not always, but more often than not, I don't know if this is a great example. Well, look, there you go. I don't know. I don't know if this is a great example. I never have to look far, do I? More often than not, we tend to find that the price holds or bounces off that dark green zone. Why does it occur? I don't know. I wouldn't have a clue. I'm the wrong person to ask about that. It just does. Look, and sometimes it'll flirt with it. Up she goes from there. Up she goes from here. And then sometimes it's going to fail. And that's the one you need to be careful about. Anyway, if we do that green price action there, we'll be holding it. And then I think I could start to move back into it. Until then, I can see no reason to be on Allkem at this stage. And that's blasphemy, Carl. How dare you? Do you know how good Allkem is? It's got lithium. So what? And that's where you really have to get to in your life. So what? Now, I went back on this one, Azure Minerals here. This one is for Flayman on the Twitter. He pinged me on Twitter today. Flayman always asks me about Delta, Azure, and Latin. I think is Flayman's portfolio. So Flayman, you might want to diversify outside of the lithium sector a little bit. I went back today and looked on my Twitter every time I shortlisted Azure. And as you know, because you probably follow me by now, but if we go to here, and just for your own reference, I think this is important. We'll go here because it's not showing up. I can see your screen is blank. Now it's not. But this is my Twitter. And if you go, for example, AZS, all right, and then you type in at to get my handle, and then my handle, which is just my name, you'll see, and go to latest, very important, you go to latest, and you can do this for any stock that you're interested in. You'll see every time I've ever mentioned that particular stock, okay? Sometimes it's just talking about stuff, for example, what the lithium price is doing, and I've just hashtagged it so people can find me. Other times it's in this format here. So it says my shortlist, 1 of 2, Azure Minerals, 4th of August. In fact, I ran it as a feature chart there. My feature charts are the charts I have the most conviction upon. I think they're the best looking charts out there. Make of that what you will, or otherwise. And you can see there's 1 of 2, and then there's 2 of 2 here. And then importantly, in the last one, it says here, these are the most important words. On list equals plus 1/3 thumbs up. My heart charts attached. I think you can figure out cryptically what that means. And I mean that. I only put them on the list if I'm personally happy plus 1/3 on them. Otherwise, if they don't see them, they're not there. So the light greens every time I ran it as the shortlist, plus 1/3, and the dark greens every time I ran it as an actual feature chart. So that was my favorite chart on the day. So there's actually one back here, one back here. 1, 2, 3, 4, 5, 6 feature charts, and so many other plus 1/3. And I just wanted to focus on this one because it gives you an idea. I had a question today on the Twitter that said, okay, how does this 1/3 business work, Carl? And I can make it very complicated. I can make it very simple. As the person asked, okay, what do you base it upon a dollar amount? You could, if you normally trade in $1,000 lots for your share investments, I'm dividing that by 3. You don't have to use my 1/3 model. You can divide it by 2. You can divide it by 4. You can divide it by 5. But I suggest you divide it by something, okay? My view is you're never all in, you're never all out, okay? You never go, that's the amount I've got to put on it, because you don't know at the start of your trade. Hey, listen to me. Come in, get close to you. Get close. You need to understand this. You don't know if that's going to be the best trade of your life or the worst trade of your life when you start out. And you might say, hey, Carl, but this chart looked amazing, or the fundamentals are amazing. And I say, so what? You don't know the future. You can't tell what's going to happen next. And this is why I don't get all in and all out. So I put a bid on and I say, you know what? Let the universe decide. Yeah, I'm one of those people. Remember, you drive around the car park, there's going to be a parking spot for me. Bang, and the universe provides. No, I'm not that bad. But let the universe decide whether that's a good trade or not. Okay, who are you to decide? What the hell do you know about anything? Okay, maybe you're very good. Maybe you're a doctor. Maybe you're a dentist. Maybe you're a lawyer. Maybe you're a school teacher. I don't know. But when it comes to the market, you're a dud. You're a doofus. You're nothing. You're a zero. And if you're crying right now, there's a button you can press to stop listening to me. It's very simple. But go into this thinking, you know what, I'm very smart in what I do in the outside world, but when it comes to stocks and markets and money, I've got no idea. So I'm just going to put a bid on and see how it goes. And that's my whole model. That's my whole philosophy. So plus 1/3. Let's not use dollar amounts here. Just let's use shares, because I think it just makes it simpler. All right. So, and it gives you the idea of what this is about. Let's search plus 3 shares. Think that is plus 3 shares. We bought 3 shares on that day. Very simple. And then we bought 3 shares. I know the price is going to change. I get that. But let's just keep it simple. So I bought plus 3 shares. Do you get where I'm going with this? Now look here. On this day here, in session, this is not something I tweeted, but in this session, the session we're chatting together right now, I said, I don't like that candle, minus 1/3. Well, what does that mean? Up to that point, how many shares did we have? Well, let's get rid of that now. We had plus 3. So this would be, well, do the maths, right? And this is why I'm using 3s here, right? Because I work in thirds. So this is going to be minus 2 shares. If that just blew your mind, you go, hey, Carl, what the hell's going on here? Well, what was our total up to that point? We had 6 shares. So I sold 1/3 of what I had, which is 2 shares, okay? 1/3 of 6 is 2. And then on one of these candles here, on this candle here, there was a plus 3, and I'm just going to use 3 shares. Give me a break here, right? It's 3. And then I said, if it closes beneath the low on this day we looked at it, if it closes on the low minus 1/3, I don't think it did, but even if you did, okay, how many shares have we got now? So we've got plus 3, we've got 4 after that, now we've got 7. 7 divided by 3, it's not a whole number, isn't it? Round it up, round it down. Whatever knocks your socks off. But we're going to get out of a few shares there. And then we go plus 3. Can you see how we're only, we said if it closed beneath that low there, it didn't close beneath the low. If you'd followed my methodology, how many shares would you be owning today? Okay. Now, you're only going to be able to build up a monster position on a monster stock like this. Here's the good news. Oh, Carl, the problem with that is if it all goes wrong. If it all goes wrong suddenly, yes, you're in the poop. Okay. But we're going to back the market. We're going to back the universe to give us some warning. Okay. Will it happen all the time? No. Could open down here tomorrow. I don't know. Don't know the future. But probably what's going to happen is we'll get a black candle first, won't we? You know how this works. You've listened to me long enough. We get a black candle first. We get another candle like that. We get a candle like that. Oh, we get a little bit of a rally. Let's just buy the dip. Everybody's buying the dip. Hey, we've been trained to buy the dip in a chart that looks like that. So everybody buys the dip. Maybe even we go plus 1/3 if we've got a nice chart. But then what happens? We don't break through that peak. And we start to go, that doesn't look good. What does Carl normally do there? Well, he goes minus 1/3. If I close beneath that, there's your minus 1/3. Okay. Maybe it's a big black candle to boot, minus another 1/3 of everything we have. You see how that's working out now? And then you might say minus 1/3 beneath the green zone if it gets down here. Okay. Or your final 1/3. And you might be your rule. Your rule is I get out until I've got 1/3 left. And the final 1/3 only goes on the break beneath the long-term zone. And hey, I'm giving you a method. You make it your own. Because you might be that person that wants to have that little bit of skin in the game as long as possible. You might be the person that appeals to you just to get the hell out. I don't know who you are. I know who I am. I know what I like to do. But at least I'm giving you the tools to create your model, the model that suits you. The good news is you'll hold the best stuff and you'll dump the worst stuff. Let's go. That's a great segue. Let's go to the worst stuff. So let's talk about Sayona Mining. This is one that came through today from Maverick 007. Now, Maverick was typing away, and Maverick, I don't mean to, hurt your feelings here, Maverick, but I don't care. Honestly, he was telling me that they're in production, and honestly, mate, I couldn't care less. I couldn't care less about Sayona. I couldn't care less about what they do. I couldn't care less about the directors. There's so much chatter on Twitter and Facebook about just how bad this company is, and yet people still own the damn thing. Okay, so if you're using my model, we all know that there's absolutely no possible way you could own this pile of junk. Hey, Carl, but wait. You know what? If it starts going up, I'm happy to buy it. I'll be its biggest fan. I'll be the one touting it everywhere. But until then, I can't see any reason to own this because I can't see the market wanting to own this. And if the market, like my grandmother, my nana, my mum's mum, wonderful lady, very, very smart lady. She told me something very important one day, and I might have been 10 years old, and I've taken this little adage with me this whole time. She said, she was sitting by here one day, I can't remember what it was about. She said, Carl, don't fart against thunder, she said. I can't remember what I was doing, but it's the greatest piece of advice. And I really only started to understand how good that piece of advice is when I started trading shares. Carl, don't fart against thunder, mate, because it ain't going to get you anywhere. Sayona is a great big fart, and the thunder don't like it. You're not going to hear that anywhere else in the financial services media. Let's go to, should we stick with the theme? Stuff I've told you not to own. Core lithium, pile of junk. Is it starting to look cheap here? I don't know. Is it? I don't know. Go do the research. You fundamental analysts out there, go do the research and then come back and tell me, and I'll go over here and play Tetris on my phone. This is what I have like. I thought I actually ran this. It's just popped down today. I thought the last three candles looked really good. But hey, what do I know? I think today it's okay. That lower shadow is building. We won't know until the close of the session. It's really important every time I talk to you in these sessions that I say, oh, look, I really like this, plus 1/3. Wait to the end of the candle. It's a function of the format. We do this analysis during the trading day. Ideally, you do the analysis when you're almost certain that candle is finished. You could do it at 10 to 4 if you like, city time. At least you're going to be confident that candle's going to be finished. You can get in before the end of the candle. I've just clicked update. The update's come through. Hasn't changed all that much. But I'd say I'm not liking this one. And you can see we've got some exits on this already planned. So pre-planned previous weeks. Where we've actually started to push out some risk here, and it shows how flippant the system can be sometimes. What's this? 97 or better, plus 1/3. Okay, well, never did that, never got there. Minus 1/3 on this candle I've written for good reason, because this is your big supply here. That's your point of supply, and this is your confirmation. So I see that, I get nervous. Okay, that's me, I get nervous. I go minus 1/3. I've still got stuff remaining. And then I've said if it closes beneath here, and it hasn't done that yet. But today might be the day, and I reckon you're managing your risk again. So I'm just going to go copy paste, and I'm going to say close. Close less than is normally how I write it. I normally have caps lock on. There we go. So close less than. Close what? Less than what? That low there. That low is 83. All right, so let's say close less than or equal to. I'd give it some room, right? 83. I'd go like an 82.5 or something. Let's go less than 82. So that implies 82 or worse, and that's it. Minus 1/3. And I reckon then if you added a third in here, you've just dropped it out. You've gone, oh geez, that was a really pointless exercise. I got in at 95 and I got out at 83. Welcome to trading. What we don't want to do is be holding on all the way down here when this finally does crack. I'm not saying it's going to crack. I don't know what's going to happen next, right? And if you want to hang in there for the prospect that this is going to be the best lithium company in the history of mankind forevermore, then this is your fail-safe, right? You might only be in that position where you've just got that 1/3 left, and that stays until you get beneath the dark green zone, because we've seen so many times how that dark green zone supports prices. Okay, I thought it looked really good yesterday. I don't think it looks as good today, but I don't think it looks as terrible. Hey, don't make the candles. Sorry, don't blame me. Let's now. I want to go down the list. I'm not going to do all of them, but GL1. I see certain people tout this one. There's some really bad accounts on Twitter. I do follow the Fin tweet, and there's some people out there that have no idea, and I want to shout at them, but I hold myself back. We've got a light green zone at least. We've got a dark green zone, but you can see how flat they are. This was, again, I would have said this looked very interesting here. This was a very solid candle, but it's just come back so harshly since then. This candle's a killer. And I wouldn't be holding a risk position. For me, this looks like an at most plus 1/3 remaining. That's where I'm at this, and not more than that. I'm certainly not looking to buy it anytime soon. What would I need to see? High peaks, high troughs, white candles, etc., etc. And hopefully just starting to just sort of get this feeling of just how unemotional I am towards these things. They're just charts. Stop scratching the surface and learning about what they do. Because I find the more research you do, the more you convince yourself that this is the one. And then when the market is telling you it's not, you are still convinced it is. And it's really hard to let go of something. The other problem with doing all that research is as humans, we are conditioned to learn. We learn over and over that the more work we put in, the bigger our rewards are. And that might well be the case in your career. It might well be the case in your relationships, but it's not the case in the markets. The more work you do to convince yourself that Galan Lithium is the best lithium company in the world, the harder it's going to be to sell it when these trends change. And you can see when my model would have dumped this and then really not have been very interested in it until now. And it's certainly not interested in it yet. And I'm just picking off the ones we all know about. This one, I think we said last time, I think we're done. I think we were fed up with IGO. You can see all the minus 1/3 here. And we said closing beneath the long-term trend zone. And a great example of giving it that room beneath that dark green zone. And once it gets beneath there, it's you really have to be convinced by then. Surely, how much more does the market need to convince you that your original thesis is wrong if you're still holding on under there? And hey, this can get taken over tomorrow. It may be, but what are the chances of that? Or what are the chances of how many times you've seen this thing crack below my dark green zone and never come back? Hey, it's up to you how you do things. It's not up to me. It's your money. There you go. And look, if you've been watching me for any period of time, hopefully, if I haven't made you any money, I've saved you money by consistently telling you my model thinks this stuff is junk, and it still thinks it's junk. In fact, it's as bad as you can probably get. Lithium, I'd love to do this one, but unfortunately, we could get some pain on this. Is one I have been calling a buy up to, not that one, Loyal. We might even do that one next. With plus 1/3, we have some exits on here, but it's all going to come down to what happens with the Mali government, unfortunately. So no updates on that yet. You did see Loyal Lithium come in. I'd hold that one. I don't think I'd be rushing out to buy it just yet, but I do love these big white candles and the big gaps and the big volume. They get me interested. Why? Because I now know the market is interested, and when the market's interested, interesting things can happen. Not always good things, but very interesting things can happen. So it's something I'd be happy to hold. And a lot of people say, oh, it's gone up, take profits or whatever. It's gone from 20 to 55. I say, no, if I had that, I want to hold on to it, because if it can go from 20 to 55, it can go from 55 to $1, right? Why not? Anything can happen. You have to be open to these possibilities. And if you're open to these possibilities, then you can make yourself hold on and catch those big swings instead of getting out when they go up for a little bit and then kicking yourself for months and weeks and years about all the stuff you sold too early on. Oh, I never get the winners. All of my stuff's junk. Look at Sayona. I had Delta, but I got out after it went up 4 cents. Oh, I had Azure, but I got out after it went 6 cents. Oh, I've got Sayona, I've got Core. Come on. Sorry if I'm resembling you at the moment. Mineral Resources, no interest. I said that last time. I'll say it again. I've no interest in this. Some people think it's the greatest company in the history of mankind, or will be, but I've just no interest at this point in time. Doesn't mean I can't have an interest in it. It's in it soon or tomorrow. This one looks pretty awful. I think we said that last time. I think it's looking really, really shaky here, as in it could go down very quickly from there. Not happy with that one. This one confounds me. It is a monster. As much as we'd be a plus 1/3 remaining, but we have had some exits on this because of the big black candles and the gaps. I don't know, and it goes to show this idea of just that plus 1/3 remaining, how wonderful that is, and just letting that dark green zone hold that last little bit for you. Imagine that dark green zone is literally holding onto that last little bit for you, and at least you would have still had a third. So I reckon I would have had exits here. Why? Because my technicals tell me these black candles mean something bad. And then what does the company do? The company goes and reports more resources. It reports great production and cash, and it's just killing it right now. I don't know the future. I don't know what the companies report, but I do know that this happened. People panicked. Oh, Carl, people panic every day. Yeah, okay, well, they panicked enough to get me out. Oh, well. Ho-hum. And this is why this model is so beautiful. It really is. I want you to just go and just dwell and ruminate on this model and the beauty of this model. It's the most important thing I'm going to teach you. It's not candles. It's not trends. It's not price action. It is actually the model. It's It's not how you get in. Often it's how much you get in and how much you get out. Let us keep moving. What are we doing here? PMT. I'm going to make sure I've done everybody's LRS I need to do for you, Flamin. I've done Sayona for Maverick. And then we'll keep moving. Okay, this one looks really, really bad now. There you go. So last time I looked at it for you, this was my view. 0% buy, 10% hold, 90% sell. I'm not a short seller. Hey, that's, I'm not a short seller of Patriot. I know there's plenty of press out there of all these evil short sellers and, they're going to get their comeuppance. Maybe, maybe not. I just think, just use some common sense here. Black candles are not constructive for the price to go up. Black candles are excess supply, and as much as you wish this will go up, the reality is that there's other people that disagree with you and they have more money than you. This looks really, really bad. I think I'm going to change my view on this one to this as of today, and it's only a slight tweak, but it's an easy tweak to make, and that would be my view of Patriot Metals. And I'm happy to stand corrected. Again, I'm not advocating people go out and short it, but I'm just saying I can't see a single reason to own this. But Carl, go check out their lithium deposit. Okay, I'm not going to, but you go do that with your time. I'm sure that's a very constructive use of your time. Vulcan, no interest in there as last time, WR1. I think this is okay. I could certainly hold this. Maybe you're still that minus 130. Maybe we're still that sort of plus 1/3 remaining on this one. Maybe a bit more. I'd almost be at this sort of level, And it's just a matter of, well, Carl, should I buy it? Should I sell it? Well, that's how I feel about it. I think if you had it, you've got more than half your position on it. I don't think you've got a full risk position here, because I don't think it warrants it yet. Why? Because of this stuff over here, this great big point of supply, almighty point of supply. Imagine. I've typed it before. If I'm anything, I'm consistent. This is an almighty point of supply. Imagine how many chat room hopefuls got in up here, right? Waiting to get out. It means there's latent supply at that level. So I don't think I'm a full position here, but I think you've got some skin in the game. Why? Because look how much better it looks than so many of those other duds we've looked at today. Light green, dark green. I'm happy with that one. And sorry, Flame, LRS. Looks, again, it's similar to the last one. I certainly think you've actually, in fact, I think you've still got a full position here. I know these two candles aren't great, but you've got to give it some wiggle room, and I'm fine. And maybe we've been knocked out of this a couple of times in the past, but I think, even here, you're probably getting some back in. I know that doesn't sound good to you today, but I have to be honest. I think this is a really good candle here. And for me, I would every day of the week be looking at that sort of a candle and going plus 1/3. And if it doesn't work out, then it doesn't work out. And that's just how stuff works in the market, right? So I think that's a great day to buy. Carl, that doesn't make any sense. Look, it went down 2 days after. Well, hey, I didn't know what was going to happen next. But for me, I think that's a great day to buy because it's a picture of demand. And I know that if I buy when I see pictures of demand, I usually do pretty well. Not always, but I usually do pretty well. But I think we're okay here. And I think, we're holding probably better than the last one. I said plus 2/3 on the last one, but let me say at least plus 2/3 on this one, at least, if not a full risk position at this stage. I know that this disconcerting. If you're on this one, Flamin, I'm assuming you are, what would you be looking at? Well, I don't want to see 3 black candles in a row with a close on the low. That would annoy the crap out of me. I mean, sorry, pardon my French, that would annoy me. This isn't a little demand. This is not a demand point here because this is an inside candle. We're going inside up. So it's not the greatest price action because technically this is all one trend here. Look, high highs, high lows, outside, keep going, high highs, high lows, inside. This is all part of the same short-term uptrend. So this is certainly a peak. And the thing about this point of supply, hey, points of supply, that's what's happening, isn't it? We've seen the supply. It's the same. Actually, it might be a little bit less. What's that high there? 42.75 versus 42.5. No big deal. I've got to say they're roughly the same. It is slightly lower, to be fair. But that makes this the pod. And therefore, for you, Flamin, it's a bit of a ways away, which frustrates me. Right? I don't like to have that trigger for managing my risks so far away because I don't want to give up too much profit. Maybe look at this. So you can see minus 1/3. I don't want to lose that because I think that's very valid. That candle there is very valid. Maybe through here, Flamin, is your manage your risk point. So on a close beneath here, okay, you could go minus 1/3 Let me just put that on the screen so I know it's there for next time. Close less than minus 1/3, and or worse candles until then. Okay, deep breath. There you go. If I've forgotten any lithium stocks, put them in the list. I'm sure you will. I can see a bunch of them in the list already that I've done, which is wonderful. And I'm going to move away from lithium now. Okay, let's go to AW1 American West, which I don't think is, this is a copper stock, right? Hey, Carl, you've tweeted this about 10 times. You should know what it does. I wouldn't have a clue. I don't care. But yes, I tweeted it as soon as yesterday. And again, I would buy it yesterday. Look, is it the best setup yesterday? I would say it's the most amazing setup, but it's a long way away from the light green zone. But I'm not going to tell you not to buy it. Okay, I look at that and I go, for me, and this was my feature chart yesterday, plus 1/3. You know, Carl, I've been following you for a while. I kind of get where you're at, mate. I understand it. You know, I'm with you most of the way, but mate, I still can't make myself buy. That when you put that in as your feature, I can't make myself do it. And I would put to you, go back and have a look at that Azure chart, because the Azure chart looked like that so many times. I tweeted it as my feature, it's just vertical. But you have to find the model that fits what you're capable of. What I would say then is don't do a third, do like a sixth, or just do that, just put $20 on it, like whatever your minimum is. I know that's hard to do when you've got $500 minimums, but you might be on a broking platform that does fractional shares. And what we can do, I'm not saying we can do it on American West, it's a very small company, but certainly on our bigger shares with our CFDs, you can do fractional shares. So you can actually go, you know what, I'm going to put $50 on this if it all goes wrong. And here's the thing, you know, you might buy $50 worth of shares, right? But using my model, you know the only way you can lose $50 worth of shares. Let's face it, the only way you can lose $50 worth of shares is if the stock goes to zero. And that's not going to happen. I'm probably going to give you some signals before that to get out, or you're going to find the signals yourself because you've learnt my methodology. You're not risking the whole $50 if you get what I mean. But find that number where you just don't care. I mean, you go down, I don't know, where you go to the pokies, or you go play lotto, or whatever it is that your little vice that you might go have a drink after work on Friday, you know, a couple of pints of beer, whatever it is that you go, you know what, if I lost that money, I don't care. But what I can learn out of that money is the value of taking that plunge and buying those stocks that I could not make myself buy before. Many of you listening have already realized that. You've already got that. I have to do those things that make me uncomfortable. Because that's, if I did all the things that made me comfortable, I'd be a value investor. Now, what was I doing? I was talking about American West for Nick. I'm a holder here. I know this isn't the greatest of days. I know I said that yesterday I would buy some, and today's it's a black candle. Oh, well, okay. That's going to happen from time to time. But I think you're holding the full risk position here. So for me, this is definitely, one remaining. No, I do 2 plus 1/3 plus 2/3 remaining. This is one remain. Let me fix that for you. Remain in, as in full position, full risk position. Maybe we'll call it that. Let's go FRP, full risk position on this one, because I haven't seen a reason yet to minus. Well, if you just got in to minus 1/3, this for me is a no-no. So just for your reference, to tune your eye in, if I see a big black candle like that, I'm typically going minus 1/3, just for precautionary measures. But I think then you've still, you might have even added it back in there. And I think you're carrying a full risk position prior to that because it didn't close beneath the 1/3. I've tipped this many times. So, 12 to 33 times, that'd be a nice little swing for you, hopefully, if you got on. IVZ, going to pick up the pace a little bit. Invictus Energy. I do want to do this. I'm not going to do this super quick, just to show you that it exists. And I wanted to show you this one here because I know where did you go? Where did you go? Oh, I want you to come back, but I don't want to have to close the window to get you back. I was going to show you Sayona. Well, that's Pilbara. I just know it's super popular. So let's do this. It's the Refinitiv Icon spreadsheet. It's powered by Thomson Reuters data. Thomson Reuters, one of the biggest financial data aggregators in the world. Refinitiv Icon is a product, costs about $2,000 US per month. That ThinkMarkets facilitates this for us to have. Thank you, ThinkMarkets. Go open a ThinkMarkets account. It tells us what the 16 brokers who have provided recommendations or data to Thomson Reuters for all their various metrics. And it's not just the ones on screen. There are hundreds of data points more. I've just got the ones I'm interested in. So we get their estimates going forward for the next 3 years. We get historical data as well. But we also get for these 16 brokers their price target. And for your reference here, the Pilbara Minerals price target is $5. It's 3.5% below the current price. Now that current price is based upon probably yesterday's close. It'll update at the end of today. Okay. In terms of their ratings, we've got 3 strong buys, 7 buys, 4 holds, 3 sells, which is interesting. It's a polarizing company. EPS line is through here. Obviously, it's a company that's only really very recently started to make money, but doing it in a great way this year at 77 cents versus last year's 17.5. But then as the company matures, as lithium prices, we know they're falling. I'll show you a chart in a second. The company's expected to earn less, and then the earnings growth will start to stabilize from FY26 and beyond. But it does mean that your earnings are going to contract by 13% compound over the next 3 years. And this is why my model won't like it. By definition, it doesn't like earnings contraction unless we can get it at a PE discount to the market that is so sufficient that it warrants that. And my valuation here is suggesting that the current P of 9.7 probably isn't enough. But I think this is somewhat of an extraordinary circumstance because the spreadsheet can't deal with all possibilities. And this sort of an earnings curve is quite extraordinary. Look, I think the brokers, and just looking at sort of historical PEs here, we don't have them, do we? We've got 29. I think that's too high. I think 6 is too low. And then I think 10 or 11 is about right. Typically for this, you might go, say, somewhere between 10 and 12 is probably about right. The market P is about 15. And I suspect, looking at this, the brokers are probably using probably a 12 or a 12.5. So if I go 12, I get about 519. So I think given the current price, they're probably using about 12 or maybe just under 12 for that. And that's not crazy either. That's probably pretty sensible. But just having a look at that. Now, the reason why I wanted to do this, and I know I typically only do this for stocks I'm interested in buying, but there's just such a groundswell of interest in this particular company that I just wanted to just focus on it a little bit today, because there are so many investors out there that are confounded, befuddled at why this company is doing so poorly. And I just try and reach out and help people, which is why I'm here. This is for your reference. There are only 2 brokers covering, but they do have a 25-cent price target, which is significantly above. We don't have any earnings per share this year, but we're expected to get it next year. But then if you look at 1.8 cents and then 1.7 cents, it's not spectacular. In fact, for a company that is just coming to earnings, we would expect those earnings to be accelerating, not decelerating. So this is quite befuddling and confounding to me. And it doesn't look attractive to me on that dynamic, and then I'm not sure if it's worth it. It's not the quality of Pilbara. Let's face it, it's not the quality of Pilbara. What else? 8.7 is probably about right. Even if I was very generous and gave it a low growth rating of say 10, it's still suggesting to me that the valuation is about right. If anything, my model would suggest it's about 5% overvalued. Okay, so for all of those people out there that keep telling me Sayona is so cheap, the actual financial metrics, and these are not my numbers, these are the broker numbers, would probably suggest otherwise. Okay, and Carl, but well, hey, these aren't my numbers. Okay, I'm just saying if these numbers turn out to be the case, okay, and if you say no, Carl, they're going to earn 5 cents a share in that year. Okay, well, okay, but if these numbers turn out to be the case, then I don't think it's as cheap as some people think. And let us get moving. Look, this is just as much about education as anything else today. Hopefully you agree. Invictus, this is also for Nick. I'm all up into my second person today that I'm getting to, and we're 40 minutes in. No, Nick, not for me. And you know why. Amber I can deal with sometimes if we've got a great light green zone. So I'm talking about this amber here. I don't mind buying stuff when that's amber. If the short-term trend is amazing, the price action's great. What's great price action look like? Looks like this, right? Stylizing, but looks like this. Okay, and lots of white candles and lower shadows. I'm not seeing that. That's a pass for me. For me, I can't see any reason to own that. Okay, PME, I'm guessing, Medicus. Still happy with this one. It's one of those portfolio stocks, isn't it? Buy and hold sort of things, as long as the light green zone is up. For me, I'd be going, and I like this terminology that I've introduced today, if I say so myself, because I think it makes it clear how I feel about it. for FRP remaining. Full risk position. That's how I feel about this. I can't see why you wouldn't have a full risk position on this at this point in time. I think it's a wonderful chart. Does that mean it's going up? I don't know. I'm sorry. If you tuned in because you're going to expect Carl to tell you that stuff's going to go up or down, you're wrong. I don't know. If it started to do this, I'd be concerned. And then this thesis would change. It wouldn't deserve a full risk position, but I'd still have some skin in the game. And that last 1/3, this may be the way you do it. The last 1/3 doesn't go. It doesn't leave until we get under here. Okay. So happy holder there for PME. I can do this. I'm curious now, just while we're here. And I had 2 of these windows open. So, because this takes a long time. The regulars know that Thomson Reuters, the server, is very slow. So that's why I had 2 windows going, but then my OBS software didn't like it. Look, we'll come back to that. It will come. You've got to remember, this software's not being used by traders like us in a webinar like me. It's, they've got plenty of time to type this in and wait for the results to come in. And it's a huge database when you think about it, tens of thousands of data points, and that's why the server takes some time. So we should cut Thomson Reuters some slack here. Now let us make sure that we got this right. And my spreadsheet looks to hate this. Well, it hates it because we're stuck in here, so we need to make sure we've got the right settings. But let's look at the brokers first. 12 estimates. And of those 12 estimates, we've got a price target of 65.40, which is actually beneath the current price. So they're saying it's a bit overvalued at this stage. Very polarizing company. Only 0 strong buys. That's crazy. I can't believe that. For a company that keeps going up, no strong buys. And it goes to show, brokers sometimes. 2 buys, 7 holds. Because I've been a strong buy on it for a long time. 2 sells. Have we ever seen anything so polarizing, ladies and gentlemen, in these sessions? EPS line, is it bottom left, top right? It is. And that's why I love Pro Medicus. Look at this, man. Look at the history here. You've got a pandemic. You've got supply chain shortages. You've got, record inflation, 40-year high inflation and problems to deal with. And look what they do. They just keep delivering. And they're expected to do so 22% per annum compound annual growth rate over the next 3 FYs. It's so much better than the market. The market's going to give you 7 or 8%. Now, typical market P is 15 times. You're not getting this at 15 times. This company is so good, you will have to pay more, so much more. In fact, that historically, oh my gosh, what you've paid for this. And if you've ever been a value investor and looked at that and go, well, I can't buy that because it's the PE too high, you've got this one really wrong. And yeah, this is a monster PE. It's rich for me. It's rich for me. I can buy it on the chart. No hassles at all. I reckon, you know me, I kind of cap out at 40 and it's still saying this is too expensive. I mean, this is saying this thing is priced for perfection in the market. Hey, who am I to say that 40 is the right number? That's where I tap out. We can go dynamic if it'll tell you where the market is. So the market's using a 92 PE on this. And if you're using the market PE, that is the median of the next 3 years. So that's what the brokers are kind of feeling and predicting going forward is the right PE. That's what that number is. Then it's actually still really cheap here. And this is so this is telling you what the chart's doing, isn't it? Now, how does this all work? What's the magic behind this? You'll never know. I'll never share this with you. This is my proprietary. I know the data comes from Thomson Reuters, but this stuff is mine, and this will never be released to anybody ever. But I can assure you, this is far more representative of what the chart's doing. Yeah, I mean, Goldman Sachs, Merrill Lynch, UBS, Deutsche Bank, JP Morgan, they've all got their own spreadsheets just like this one. And this is how they do valuations. They're literally just tweaking. So I can change the risk level. I can change the growth. I mean, they're just tweaking what their expectations are for the future. And then ultimately valuations are just maths. They're just maths. It's just discounting future cash flows. But you need to be able to know you need to be able to forecast those cash flows. I can't do that, but I take the consensus cash flows, right? I assume that Goldman Sachs does great research. I assume that Citigroup does great research. Teams and teams of analysts way smarter than me. And then I just use my formulas to use their numbers to get valuations. I know I'm a technical analyst, ladies and gentlemen, but I started life as a fundamental analyst. I know you probably just literally fell off your chairs, but I was a value investor when I started because I came out of uni like every other analyst, right? And then I started to learn about this. I bought this little red book by Regina Miani. She's still around. She's on Twitter. You can go follow her. Regina Miani, little red book, technical analysis of the Australian share market or something like that. I was in my late teens when I bought that book, so sort of just the start of uni probably. And I studied that, and it was just, oh, okay, this is interesting. So still did all the analyst stuff. I've got half an alphabet after my name on my business card, of course, because I've got all that training. But technicals were a bit of a fun thing to do at the start. But as I started to use them, as I started to learn more about them, as I started to apply them, I started to realize, my technical trading is doing a lot better than my value investing. And if you're smart as a human being at some stage in your life, you go, I need to do more of the stuff that's working. I need to do less of the stuff that isn't. So I'm not saying I can't do fundamental analysis. I'm not saying I won't do it. I'm just saying I don't need it. But hey, you are you, and you should do it the way you need to do it. And some stuff will appeal to other people more. Okay, and I respect that. Clearvue, I like this one. I could never have bought this. I wonder if I ever ran it in my shortlist. It's just the candles, the sketchiness, the illiquidity. But yeah, look, if you're not me, there are so many reasons to buy it. And I think I've even talked about this in the past, but I'll point out to you the candles I really, really like here. So here, here, and here. This trio of candles, in fact, that fourth one, that is such a ripper pattern. It's too illiquid for me, but for you, that's what you're looking for. This is turning around. This is already turned up. The price action is doing, see what I started to draw there last time, is doing that, and you get those candles in a cluster. It's magic. We have talked about a bit of a point of supply in the past, but I think it never even looked like the supply was manifesting itself there. Look, happy holder of this, full risk position for me. And some people will say, hey, Carl, that's gone up too much. Surely you should take some profits on this. I say, you can do whatever you want, but I can't see any reason why I shouldn't continue to run with a full risk position on Clearvue Technologies. These guys are the fancy glass, right? The eco-friendly glass. I do know that much, Perry. LYC, Linus. I was going to say for Craig, you're not going to like what I'm going to say about Linus, Craig, but actually this is looking super interesting. I can't buy it, Craig, you know why, but I think this is going to go up. It's one of those ones where if I'm off air, I might just knock a specky 1/3 on it. You know what I like, Craig. You know what I'm talking about. Craig knows what I'm talking about. He's all over it. So this little high trough here, high point of demand, but it's the white candles. Craig knows it's the white candles that Carl loves coming in here. Too early for me, Craig, but maybe this kind of helps here. Look, if you've got it, hold it. It's back to a hold because I thought it was pretty awful not that long ago. But I think, what are we going to go? 0%, officially 0%. Officially 0% buy, right? Officially. Unofficially 10% buy. I don't think it's a sell anymore. I don't think it's a sell with that. So I'm just going to go 90% hold. So I don't think it's a sell right now. Now, what could change my thesis to make it a sell? Craig, if I see stuff in here I don't like, right? Then that becomes a sell. But until then, that's where I'm at. But for me, unofficially, 0% buy. You know why. Okay, let's go to Tanya asking for CPV, which we've coincidentally just done. So these are Tanya. I know Tanya's listened to me for a long time. I know Perry could do these webinars. If I call in sick one day, I'm going to get Perry to do them for me. So both of you looking at CPV makes me feel good because I know I've trained your eye to look for what I feel are the right things. FCL, which is one all over. Not only have we talked about it plus 1/3, but I can assure you that on this day here, I ran it as a feature chart. I don't even need to go check my Twitter. I know because that's the buy signal. And I can guarantee I ran it as a feature chart on this day, probably this day as well, and probably this day. I certainly ran it on this day because they're all the stuff I want to see. We've got 3 little black candles here. Today's candle is the worst of them, but not enough. And this is where I might sound contradictory. Oh, Carl, usually you get out when you see black candles. That's tiny. Look how big the demand is. Look how big. Like how big is demand? When I say demand, I don't mean demand. I mean excess demand, don't I? There's not just demand. There's demand everywhere. There's demand. There was demand on this day, right? Is that fair to say? There was demand on that day. How do I know there was demand? Well, there was volume. If there was volume, right, there was demand. People were selling, somebody was buying. There was demand on that day, but was there excess demand on that day? No, there was excess supply. So, I know I'm a bit flippant the way I sort of speak sometimes. Oh, there's demand, there's a point of it. It's really about excess demand, isn't it? So how big is the excess demand here, and how big is the excess supply? So that's why I'm not worried. So for me, I think I'm still our new terminology, FRP remaining, full risk position. There you go, another acronym for us to have to remember. I'm going to make that green because that's what we're using. It green is good stuff is happening, and red is we need to think about selling. Happy with that one for you, Alan. And then we're going to go to CRN. Oh. Ouch. Oh. Yeah, I didn't see that coming. Now, this is not good stuff here. I didn't see that coming. I don't think I tweeted this one. I refrained. I'm pretty sure I made myself refrain. I talked to you about my disbelief in coal. I'm pretty sure. But it looked tempting. And that's the thing. It was tempting. Did I? I don't think I did. Did I? Let's go latest. August 7, which that's reporting. There you go, reporting. So Tuesday, we knew that. Shortlist July did, didn't I? Oh, I did a plus 1/3. I didn't make it a feature, did I? Catapult, no. Catapult's still going. Doug, no. Ooh, I gave in. I want to look at that July 19. Let's go July 19. What day was it? There you go. That's the one. Oh, that's naughty. It's too early there, but I like the candle. Was it the wrong time to buy? Well, not really. As a plus 1/3, and that's the only plus 1/3 I gave you. But it's early. That's an early one. You know why it's early if you follow me. And the minus 1/3. And anyway, I'm not going to say where it is. I'll let you decide if there was one. In fact, there is one there is a model one here. So obviously that for me is not good. After this one, see the little demand here. Got demand. See the low point there, shadow, demand, and the close beneath that with the upper shadow is a wipeout for me. For me, that's minus 1/3, but that's for me. My eye is tuned. I want to tune your eye, but I think what's great about my model is that it did give me a little exit here, didn't it? So on a close beneath there, which actually didn't come. Don't think it came. Look. Change the screen. Yep, no, thank you. Okay, tell me straight away. There we go to here. So this is Coronado. Obviously identified this is the plus 1/3 day, which is too early. And I looked like a genius here calling it. But yeah, this for me, this minus 1/3 here. So I'm talking about this low, the shadow, right? There's a little mini point of demand, and we close beneath it convincingly for me. That upper shadow and that black candle. So for me, that's minus 1/3. Now, if you didn't pick that, I was going to say the next very clear stuff that I've taught you is you got a little point of demand here. Well, you got a lower shadow, and it's semantics, to be honest, right? And the reasons why it's semantics I'll explain to you, because this is clearly a point of supply. There's no doubt about that, right? That's a POS. So I'm trying to teach you how to apply the model here. And then the question is this a point of demand? And for this to be a point of demand, we've got the short-term downtrend on the left. So this is stuff you can do. Is that low lower than that low? Yes, it is. Is this low lower than this low? No, it's not. So this is not the start of the short-term uptrend. So on this candle here, this is not yet a point of supply. But look at this candle. Lower high, lower low. Now this is a point of supply. Okay? Everybody can do that. And the question is this the point of demand? So we need to check this high. You can see this high here is the same. And then that's the same. So technically, this never went into a short-term uptrend, which never made that a point of demand to the letter of the law. But like I said, semantics. I think we can see that this is a point of demand. How do I know there's a point of demand? Look at that low shadow. And therefore, I'd say if we close beneath that low, so that low, is 164.25, so say 163.5 and lower, then you would be at minus 1/3. The third that you got in, you're out. Now, I can't say you did that because this is just reality. I would love, oops, where's the low there? There's the low there. 160, what did I say? 163.5. No, that's the low, sorry, at the close. The close is 166. So I said that low there, 163. So 162.5 is the exit. That close there, it's the close. 166 never closed beneath that. So what that means is you're still in today. Okay, so what I'm trying to say here is if you're in here and you didn't get out here, you're still in. And what's the point of this? There's no point of this apart from just showing you how to apply the model in finite detail. Bottom line is you're on this. What do you do now? Okay, there's no question. If it closes like that, minus 1/3. For me, and this one got me as well. If it closes like this huge demand pulse through here, look at that. This is all demand. Yes, it gapped down. I get that. And this is part of a candle. I'll call it a gap. No, this is part of a candle. Blend this candle and this candle. This is part of a candle that's mostly black. So I don't have the right answer all the time. And I grappled with this and somebody asked me about it on Twitter and I had to give him an honest answer. And I said, look, I think based upon this shadow, I'm a holder. But what you have to imagine is that this is, and I'm not backing away from that call, and it's annoying that it went down the next day, but I'm not backing away that call. But what you have to imagine is how hard it is for me to make this call, just given the incredible circumstance. But this is a black candle that actually looks like this. Okay, this is a black component. I know there's a gap there, but if you're blending these two candles together, that's what it looks like. And ordinarily, if you see a candle like that, what would you do? And I probably should have drawn this for myself. And I think there's some value in doing this visually when you get those gaps, is build the candle or make the candle. Okay, if it helps, blend those two together, that's what it looks like. No, that's better. Look at that. So if you see that candle, what do you do? What have I taught you to do? And I think I made the wrong call, and I can only say that now with hindsight, because I kind of looked at that and said, there's so much demand here, it's worth hanging on. And then look, you can see here that really did come into play, didn't it? So, and this is hindsight, and forgive me if I told you the wrong thing, but I think that's minus 1/3 compulsory. And then what are you doing here? And I don't have an answer. I think, and I did say in that tweet, all you're doing here is waiting, hoping to get a better exit because of this demand that appeared to be in the system. Maybe you're going to get something that resembled this, and then you're waiting for a signal to get out at a slightly better price. But I did say in that tweet, all I'm looking to do now in Resmed is to get out. Oh, but Carl, it's values, it's cheaper now. I don't know, maybe it is. Or maybe it should be down here, I don't know. That's a tricky one. I'm not always going to have the answer, unfortunately. I wish I always did for you. I really do. CRN, hopefully now that Resmed puts this in the right light, because we don't have to imagine the candle. The candle is there. And it goes to show how much risk, extra risk, is associated with these turnaround plays. And I think some of you, maybe you've gotten a bit cavalier with these turnaround plays because you've seen, hey, the market has turned around, hasn't it? We've been in that environment where these are turning around, and you've seen how many of them have done really well, right? Whether you've been on them or they're the ones you didn't buy, but you can see that they keep going up after I've called them quite correctly using my model. You can see the risks involved in these turnaround plays, and this one really was, again, in perfect hindsight. Hindsight is always perfect, maybe too early, but I can't see any reason to hold this now with that big black candle. That is an exit for me, and it does highlight a little bit Alan with a sad face next to his CRN. Did you buy it on my tip there, Alan? Let me know somewhere, and if you say no, that'll make me feel better, or I'll be a bit relieved. Look, this is one we've been buying, plus 1/3, but also, I thought this looked really good. I thought it looked really good through here. Great. Again, it's more of a turnaround play, isn't it? It's sort of a mix between sort of bottom left, top right, but also you can see here still largely a turnaround play from what's happened in the past. So a little bit more risk associated in this one. We went a little early beneath the point of supply. You can see that plus 1/3. But I think on the basis of some really great candles and the fact that at that point in time, and we're talking about this candle here, it didn't look like the supply was manifesting itself. It didn't look like the market was too concerned. In fact, on that day, they're not concerned. On that day, they're not concerned. And then we had that Japanese, that announcement there, that Japanese yield curve thing. So 17th is the Thursday. Absolutely. It is the day that occurred. And they just changed the dynamics for gold. And then unfortunately it undermined what the trend was doing. And again, we can't see what's going to happen next. We can't see these left field events. But what we can do is respond and do the right thing as per the model. And the model has been quite clear, I think, since then, that from this point of supply, there's a little one here. Okay. There's a little one here, little one here, little one here. If you don't believe me, go back and take the time to find the high highs and high lows and the lower highs and lower lows and find those trends. But we did move into the lower POSs. Again, the Bank of Japan, or whatever. Interest rates in the US have also negatively impacted gold and gold stocks. It's all kind of irrelevant because the people who are trading this have taken this into account, and you have then started, I think, to be required really on this day here, because you didn't close beneath here. Look at this. This is the beauty of this close, this close methodology. It can tickle. It's just telling you this demand point there, but demand is not fixed and finite. It's spongy. Okay, different brokers get to the desk at different times, or there's just too much supply in the morning to overwhelm, but then the demand kicks back in. So don't ever assume that demand is a fixed point. It's spongy, and you've got this little other one here as well. But eventually we did close beneath, and I think that's the decisive candle there. And as good as that one is, I think even on this day, you're probably minusing a third and minusing a third. So for me, and this is just what I would do, you can do whatever you want to do. I think that candle there, and certainly that candle there, are minus a third. But I think at most, and this candle's not great either, if it closes like that, I'd almost go that, to be honest. That's just me. But perhaps for you, maybe that's what it's all about, is remaining. The reason why I draw them just under the dark green zone is for good reason as well. Okay, but anatomy of a trade: how to get in, how to get out. Okay, I need to pick up the pace. Oh gosh, I'm not going to get to everybody's today. That's a fact. REH, amazing, wonderful. Gave us a bit of heartache here, and it does show again, and hopefully you agree with me, how this model works and why this model works, and it makes it easier sometimes, just to say, well, that's how I'm going to trade things. But I think I ran this as a feature chart, I'm pretty sure, on this day. Certainly it was in my shortlist, but I think that's a great candle. That's a great candle, and that's an amazing candle. Today, this will probably be the feature. I know that this is an issue, but if we get a nice high close today for you, Nicola, then probably this MPOS is not giving us too much trouble. But we saw even with Westgold how global events conspired to reinforce that point of supply, didn't it? But I'm confident that this one is fine. And you can see where I've pointed to the perfect entry for your turnaround play about 1 million times down here. That's where I like to get them. So there you go. Pretty happy with that one. That looks really good. Today's candle, if it closes on the high, and please understand, every time I write one of these on, it is always conditional. It doesn't have to close right on the high, but certainly within that top 10% of the candle, plus 1/3. They're always conditional on that. Just assume that that's the case. Let's go to Anonymous. No, Anonymous, put your name in next time. Happy holder, I'll give you that much. And then WSI, I'm not going to put your name in. No, not interested in that one. For Nicola, you've already done one, very cheeky. Happy holder there. I'll do that. You know, Nicola, why I'm going to hold it. It looks very good. Could I plus 1/3 if it closes within 10% of the candle's high? Yeah, it's a yes. And of course, it will be reflected in the shortlist this afternoon. NVX, you can tell I'm rushing. David, beg your pardon. Oh, that's cheeky. No, David, no. No, look, keep them coming. Keep them coming, David. You know what I mean, David, right? But you know what I'm going to say about it. But hey, keep them coming. I can't say only show me stuff I'm interested in, right? Because then people don't get to learn. The people who are coming in don't get to learn the lesson. Not that I've taught them a lesson on this specific one, but I think I've said enough in today's session for them to understand. Even if it's the first time you listen to me, that is not going to be something I would buy. So let's confirm that by saying 0% buy. There's no hold. There's 100% sell. And I totally respect that this could be the best stock for the next 12 months, as it was consistently. I think 2020, 2021, and I'm going to say even 2022, it was the best stock 3 years running on the ASX. But I don't think that's ahead of it this time around for Novonix. Oh, but Carl. I know David's not saying but Carl. All right, David knows all too well. I think he's having a bit of a poke at me there, David. Cheeky. James Hardy, which is one that broke the right way. I did put out a tweet, John, and this is exactly what I answered in that tweet. And the question is it wise to take part in the profit announcement? Or I think you're talking about ex-post. So the questions I was asked today is about pre-announcement. What do I do pre-announcement? Carl, I got tagged by Resmed. What do I do? Do I hold on to my James Hardy, for example? And what I said in that tweet is that what I find, it's my experience, that more often than not, the stock price tends to break after earnings in the direction of the trend, because that's what caused the trend in the first place. Okay, investors who anticipated these great results, why? Because they talked to the people on the board. They do company visits. They do site visits. They just have better access than we do. They're already anticipating this great result, and they've been buying. Why do you think the price went up for 3 months before that result? Sometimes you get that stuff out of the blue like Resmed. It's unfortunate. But my experience more often than not, it's like James Hardie. So that's how I answer that. So if you're concerned though, if you're nervous about it, then you could literally sell a third before the announcement. At least that way you're kind of hedging your bets, but still having some skin in the game based upon the trend. Okay, I think that's a hold. I don't think this candle is so sinister today, and that candle may change. I don't know how it's going to end because I can't see the future, but I'm a happy holder based upon that candle. And this is, I know, crazy. It's a lot of people say, "Hey, Carl, shouldn't you be taking some profit now?" No. Why? Is that candle black? Does it have a long upper shadow? No. Okay, well, it's not telling me that people are getting out in droves. And what you often find, especially for companies like James Hardie, is that you get a move here because it's effectively a US company. They'll look at the result tonight, and you'll get more follow through buying tomorrow. That comes in as the orders get put in from New York. So maybe tomorrow is the day you get out with a bit of profit. And what I will say though is I would knock 1/3 up here. And I wouldn't wait for 50. I'd go say like a 49.50, or maybe even like 49.40 or something, right? So I'd go minus 1/3 at 49.40, just for the sake of the round number. That's all. Just that's where I take a little bit of profit, and I wonder if it's a bit of a pos from the past to boot. Well, it's actually here, but there is a little one here as well. So another reason there. So that's where I'd just knock out a few, like feed the masses there, but I'm happy holder until then. And look, with these exit candles, I said 3 black candles, but you can see the lower shadows. In fact, lower shadows. This was like a fighting retreat. We had a pullback in US stocks. We know that, but this is what I call a fighting retreat. Look at those lower shadows. I don't think any of these were all that cause for concern. So I think you probably could have been full risk position into that announcement, and hopefully you were, and hopefully I picked this for you a long time ago, and hopefully I made you some money on that one. Hopefully I didn't lose you too much on Resmed. But hopefully you can see, it's honestly got nothing to do with me. It's I can't control what happens next in the markets, and whether it's a win or a loss, that is beyond me. Don't blame me either way. David clarifying, not Novonix NXL. See, it wasn't a David type of request. It might have been a David type of request the first time he tuned in, but not now. I think this is fine. I know we've had a little bit of a wobble here, but we came a long way too. I mean, what a great, this was the day, I'm pretty sure I put it in as a feature chart. So if you got in at say 132-ish, you're probably a little bit ahead. Maybe you knocked out a little bit here on that point of supply. That's up to you. But I think, look, is it a full risk position, David? I don't know. What do you think based upon our discussions today? Does it deserve a full risk position? I'm going to say it does, on the basis that we haven't closed beneath there yet. So I think that's okay. But watch today. As long as it stays this good or better, then I think we're fine. But I'd be watching this and just simply just respecting this point of supply. You have got the lower posses there, David. And I'm sure, David, you're doing this analysis every day, aren't you? Say, yes, Carl, I'm doing it every day. That's what I do now. Why? Because this is important to me, Carl. That's why I take the time, and I put in the effort, and I do this every day. And I don't muck around with it, because I know that the market is bigger than me, and the market doesn't care what I do. So if I get a signal, I just follow it. So obviously watching this pat here, but we're okay on that candle. So look, I'll go FRP remaining on this. On that one, let's change that color because I'm pedantic, and it will bother me if it stays red. We've done Azure, Jill at the start. I know these are still coming through, obviously. Pilbara, we've also done. I told you that Lithium Review will head off a bunch of requests. Daniel asking about Service Stream, SSM, how are we going for time? We're very close to finishing. I do apologise. I'm not going to get to everybody's today. Service Stream, I think, is a hold, but tenuous group on full risk position, isn't it, Daniel? So we're watching out for this stuff here. We look, and again, see this is the show. I want to point at this shadow, all very important, and that's why that one disturbs me a bit. And the fact we're just hovering at that demand point, is not great, but we are being supported here. That's okay. I think you can be a little bit maybe too cautious in some of these liquid stocks because demand can be spongy. Look, I'm going to go a hold. I'm not sure I'm too happy with it beneath there, and I'm certainly not too happy with it beneath here. Okay, I think one of those two, and I'll let you figure it out, Daniel, if you probably want the definitive level, but I think one of those two, close beneath one of those two. So the light green zone or that's my minus 1/3. Until then, I think I'm hanging in there with an FRP. DDR very quickly on that one. It's a no for me, and you know why. I think that's all I need to do now on some of these, isn't it? It's a no for me, Daniel, and you know why. Coincidentally, Max asking in the next line about DDR. Amazing. Max, no for me. You know why. I need to do James's G88 because he asked me very nicely on Twitter. I think this is a hold. I'm not a buy. And the reason why I'm not a buy, James, is it's not doing this sort of stuff. That's the stuff I like. But hey, if it starts to do that sort of stuff, and in the light green zone, which is here, it starts to throw in those white candles or lower shadows, I could become quite positive on this one. I'd want to see a bit of volume. Look, I can go a hold. This is not all that exciting for me, though, I'll be honest. This would not be a full risk position, for example. I think this is kind of realms of plus 1/3 remaining is at the most. I don't think I'm holding a full risk position on this. Okay, and I like this way of sort of labeling these. Look, I think you can hold some, but I don't think I'm certainly not a buyer. Okay, I've done all of those. I need to do for Husel. Husel is a very good supporter of what I do. Now, this looks great, Husel. I've no objections. I can't zoom out anymore because that is all the data I have. But we do have a long-term trend that's up, short-term trend is up, some great candles. It's very sketchy. It's very liquid. I can see that. But a happy hold. I'm an FRP on this one, so can't see any reason why we wouldn't do it. For full risk position remaining on this, I can't see any reason to manage our exits. That's what I used to say. I can't see any reason to manage your exit, which I think implies that we have a full risk position remaining on that. Would I buy it up here? No, I wouldn't buy it up here. Why? Because of this point of supply I drew in the past through there, which I think is starting to manifest some supply because we can see the shadow there. Like many of the other ones, we haven't seen supply out there, but this one we can see it. I need to do the Peter AVH, and I know I didn't get to stream this today. I'm very naughty. Look, I think we're okay here. I don't want to see it close beneath there. It's going to be a combination of closing beneath two pods. What's worse than closing beneath one pod? Closing beneath two pods would not be good. And then beneath the short-term trend as well. These aren't great candles through here, but I don't think there's any obvious signal just in the price action to get out just yet. It's just vibrating, isn't it? So as frustrating as it might sound, I think you're still FRP on this one as well. As in, I can't see any reason just yet to exit on this one. So we will go in the light green there. All I've done is make it harder for myself with the colours. That's an FRP remaining. That is if I remain a slave to the colours. And elders, people keep asking me about elders, and it's one of those, I think I said last time, I actually like the way it's turned around. And I think I said to you last time, I think it's going up, but I can't buy it. I'm going to say that again. I still can't buy it. Why? Because this trend is still down. Don't ask me about elders again until that turns amber, okay? Because you're going to get the same response. I'm not going to waste my time doing the same thing over and over again. That is the sign of madness. ABC, I still think it looks fine. I know it hasn't really followed through today. I don't know enough about it. Is there a takeover or something on this? Look, I think it's fine. I could full risk position on that. And with the right candle, I could add some if I got it. PDN, these two are for Ron. I think this looks good, Ron. I think it's fine. I don't know if I'm a buyer just from the fact it's Paladin and it's a uranium company, and I think I've been burned too many times. But it's one of those like Elders where I'll say, look, I think it's going up. It's way more advanced than Elders because we've got this and we've got this. And it'll probably go into there, but where it'll go from there, I don't know. A happy holder if you've got it, but I'm not going to buy it just because I just can't get into these uranium stocks again and be disappointed another time. That is all that the Twitter's done. I've done a few of those and a few of those. I haven't done them all, but I do need to adjourn, unfortunately, ladies and gentlemen, simply due to the fact that we have to end at some time. And maybe I talked too long about some other stuff, but hopefully some of that other stuff was worth you listening to. Look, I'll be back next Tuesday. And why don't we, because these are getting pretty intense, as in I've got so many people in these now and people tweeting me on social media during the week. Maybe, Nick, there might be scope for a clients-only version. Maybe we can do that Tuesday afternoon, and people who want to hang around with clients, they get all their questions answered. And it might just be a function that if you're going to be in the free one, you don't. Simple solution, become a client of ThinkMarkets. This is when we do the other sessions. We do macro on Thursday, we do USA on Friday. Hey, find the link and join those pinned to my Twitter. But do become a client of ThinkMarkets, because we are the good guys in the Australian broking scene. You can trade your shares with us at $8 flat rate, HIN and share sponsored. I know some of you are probably trading at $5 or maybe less, I don't know, but I guarantee it won't be HIN or share sponsored. And it is important that you are the final and beneficial and true and one and only owner of your shares. Go Google Man Financial if you don't believe me that should be the case. If you want to trade CFDs, you want to trade fractional CFDs, you can do that with us. Aussie shares, USA shares, all commission free. And that's going to save you a bunch of money. Very important. Market leading spreads, the best rates, and you can trade all the other stuff as well. Indices, commodities, foreign exchange, and crypto. We are an award-winning broker. We have offices all over the world. We're regulated all over the world. Easy to use multi-asset platforms that continue to win awards. Dedicated account manager with 24/7 customer support, including the ability, how about this, to get on the phone and call us. Somebody like Nick or Nick's team, someone from Nick's team will speak to you straight away. www.thinkmarkets.com/au to become a client. If you're watching on any of the streaming services, hit the subscribe button to stay notified of any of my future video updates. I usually update a few times a week. Make sure you hit the thumbs up button, super important for us to get the message out there. Apart from that, of course, it's been a pleasure chatting with you today. All the best for your trading and investing. Until we catch up again. Bye-bye for now. Before you run away, the disclaimer says that everything we've talked about today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, you should consider it carefully or seek the help of a financial professional. The rest of the information that disclaimer is important. You should read it. If you have any questions about ThinkMarkets products or services, please give us a call or head to the website, download a product disclosure statement or our financial services guide. Bye-bye.